We will now continue our discussion on how to invest in stocks. We left off discussing how to analyze stocks from a technical viewpoint and from a fundamental viewpoint. So again, with the technical, you're focusing on the historical pattern of the stock price, the stock lows, the stock highs, and try to determine if it's going to be a good buy. With the fundamental analysis, you analyze the company's financial statements, their income statement, their balance sheet, their statement of cash flow, looking at their net income, their net loss, their earnings potential, and any other conditions that will affect the company's overall financial well-being. So again, when you analyze a firm's financial condition, look at the actual balance sheet. The balance sheet indicates a firm's sources of funds and how it has invested at a particular point in time. So the balance sheet shows the company's assets, it shows the company's liabilities, and it shows the company's stockholders' equity. Now, if you haven't taken my accounting courses, I recommend you sign up for one of my accounting courses and learn more about the balance sheet as well as the income statement, which is another financial statement that shows the firm's revenues and expenses and determine whether they have what's called a net income earnings, or what's known as a net loss over a specified period of time. So again, you want to make sure that the company you're buying stock in is sound financially before you decide to invest your money. All right. So here's the impact of a strong firm performance on stock price of a firm. Okay. If a firm has strong sales and a profit of a firm, investors are confident that the firm will perform well, the demand for that stock is going to increase, which means the supply of the stock is going to decrease, which causes an increase in the firm's stock price. So every quarter, analysts try to predict for major corporations what's called the earnings per share, the PE ratio. And based upon their performance over that time period, that does have an impact on the actual stock price. If a company has weak sales and weak profits, investors expect the firm will perform poorly, then there's less of a demand for that company's stock, meaning there's more shares of stock that's going to be available, and that's going to decrease the actual price of the firm's stock. So yes, a company's performance does have an impact on their stock price. So if the company performance strong, the stock price goes up. If the company is considered to be underperforming, then it can cause the stock price to actually decrease. Okay? Now, there were a lot of accounting frauds that took place in the early 2000s pertaining to financial statements, meaning that companies were preparing financial statements, but they were not showing accurate and true information, okay? Which caused investors to make decisions based upon a lie. So it is important that the company you're investing in, that their statements represent the true transactions that would take place for that company over a specified time period. Okay? We also look at the economic growth of the country as a whole. Okay? So when the company typically, or not the company, when the country, not the company, when the country is doing well as a whole from an economic standpoint, that too will have an impact on stock prices, and you'll see stock prices increasing during that time period. Okay? Interest rates. No, stocks do not have interest. So perhaps you're saying, how do interest rates impact stocks? I'm glad you asked that question. Stocks perform better when interest rates are low. That's because if you're doing other type of investments such as CDs, such as bonds, if they're paying a low interest rate, people say, well, you know what? I would rather purchase stock because they're paying me a higher interest rate that I can get from those other forms of investment. Some stocks are sensitive or more sensitive to interest rate than others. So interest rates impact certain stocks more than it does other stocks. So it's the Federal Reserve that has a monetary policy that influences the interest rate. The Federal Reserve determines the interest rates that they're going to charge banks when banks loan money from the federal government. There's something called the prime interest rate. Learn about the prime interest rate. And so it's the Federal Reserve that has the impact on interest rates, and interest rates can have an impact on stock prices as well. All right. So here are some sources for economic information. So there's the Federal Reserve Bulletin that gives information about interest rates, unemployment rates, inflation, the money supply. That all has an impact on stock prices. You have the Federal Reserve District Bank publications that get information more on regional economic conditions. So depending on where you live, they'll talk more about your region. There are surveys. You have Bloomberg. You have other Federal Reserve. You even have the St. Louis Federal Reserve District. That's more information about our economy. You got Yahoo Finance, survey of current businesses. So if you're interested in buying stock, I recommend you look at some of these different sources and find as much information about economic factors before you decide to purchase any stock. Okay? Industry condition. Stock prices are susceptible to industry conditions. We have a great example, right? COVID-19, the current pandemic. So the company that I've been invested in quite a bit in our stock market game, INO, their stock price increased from roughly about $2 to up to $30, mainly because they indicated that they are working on a COVID-19 vaccination. So the fact that they're in the market for a vaccine has had a huge impact on their stock price. Okay? Integrating your analysis. Analyzing the firm, the economy, and the industry allows assessment of future performance. So before you decide to buy stock in these different firms, so for a while again, it was the tech industry, right? So the tech industry was really hot. Right now, it's the pharmaceutical industries. So, but still, do your research just to make sure that you're making a wise investment before you're buying stocks in these different companies. Okay? Factors that increase or decrease a stock price. So again, if there's strong economic growth, low interest rates, low inflation, a strong industry conditions, proper decision by the firm, all of these factors will lead to an increase in stock price. If there's a weak economy, high interest rates mean that I can make investments somewhere else and receive a higher interest rate. If there's high inflation, weak industry conditions, decisions, improper decisions made by the firm, all of these factors will lead to a decrease in a firm's stock price. Now, limitation of stock analysis. You can analyze stocks until you turn blue in the face, okay? And we still can't predict their exact behavior. But do as much research as you possibly can, but there is difficulty in forecasting future conditions, because if we can do that, we will all be millionaires. Just think about it. Right now, Amazon stock is selling for over $3,000 a share. When it first started, it was about $13 a share. So just think, had you bought 10,000 shares of Amazon stock at $13, you would not be in this class right now. Okay? But we still do our best to try to predict what's going to take place, but no amount of analysis can predict the exact price of stock every time. Okay? If you want to know more about the financial market, you can go to Bloomberg.com, click on market data, and it provides you more information on recent stock performances. Or again, you can go to Yahoo, go to the finance section of Yahoo. And again, they have a website that provides you with information. You can even create an investment portfolio inside of Yahoo, even if you're not really buying a stock. If you want to just track what stocks are doing before you actually buy the stocks, you can do a portfolio inside of Yahoo Finance, and you can track the performance of your actual stock. I should have posted that here too because I do that as well. I use Yahoo performance section to put stocks in there and track their performance and then make a decision if I want to actually purchase those different stocks. Okay? Key decision about investing in common stock. Should you consider buying stock? That's a good question. And what method should you use for investing in stock? So again, if I'm trying to buy stock, I need to indicate what type of stock, how much money do I have to invest? Am I going to a brokerage firm? Am I going to a full service firm or a discounted firm? Or do I want to do my own investments by going online? So these are questions you need to ask yourself when it comes to investing in different types of stocks. Okay? So again, if you're using a full service firm, they'll give you guidance, but they're going to charge you higher commissions. If you go to a discount brokerage firm, there's no guidance but lower commission. You can do a market order, meaning you're buying stock at the current price. A limit order, which says buy only if it reaches a certain price, whether it goes below or up, whether it goes below or above a certain price. And with a buy stop order, you're going to say buy was executed if the price rises to a certain amount. All right. So when you're trying to purchase stock, you can pay with cash, or if you can buy it on margin, means that again, you're using firm money from the investment firm that you're investing with. You're using portion of their firms in order to purchase a different stock. Okay? All righty. So that will conclude our lecture on stocks. So I hope you found this information beneficial. And I do encourage you all to some level, to some degree, to get involved in the stock market. A lot of people have become millionaires because of their investments. I haven't been that fortunate, but I have made a nice return over the years by investing in the stock market. Okay? With that, I'll say so long.